is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday afternoon, 3:07 p.m. Eastern Time. We're in the final hour of the trading day, and you got markets in negative territory. We have been in almost a 10-point trading range, though, for more than the last 3 hours, almost the last 3.5. You got some negative action, and we're here. We're stuck here. S&P's negative by 0.5%, off 31 points. NASDAQ 100 right now, off about 0.6%. Same thing, you drive lower on that story with Oracle, that their margins are in question. Oracle has bounced back a bit, but in the red by a dramatic fashion when you talk about losing $60 billion in market cap. But boy, it's been an acceleration from the lows. Now, what has not happened, though, is that Oracle is bouncing off the lows, but this market has not. Amazon shares were higher. We're trading right now flat. You jump over to NVIDIA. They got hit by that story as well. And you're talking about big numbers, folks. Okay, NVIDIA's got 25 billion shares outstanding. That was a 100 billion wipeout just in an hour and a half from where we were this morning. And we've been chopping around. But NVIDIA, even on a day where you get a story like that, cannot penetrate this market just yet. Oracle off by 2.5%, but to put things in context, we're right back to where we were on Friday. So no real pullback at all in these markets. Jump over to Broadcom right now, down by 0.2%. They traded a bit lower today. AMD up by 3.5%, continuing the run they had yesterday. Jumping around to yields. So we have the 10-year with a slight reprieve, as in we had been getting higher, lower price and higher yield, and we've had a bit of a reversal of that. We're now approaching 4.12. Now, what I expect is going to happen here coming into this meeting that is 3 weeks from tomorrow, folks, okay, is that just as we had happen, here was the last meeting, September 17th. You spiked to a price point of 113.16. And that, I believe, dipped just under 4%. Checking out the yields right now, but it was a story where you accelerated into the Fed meeting, right? Yields accelerated lower into the Fed meeting. Let's see what we spiked to. Yeah, almost 4%, somewhere around there, the 10-year, around September 17th when we got that quick spike, as well as this area on September 11th. But you came into that meeting at the lowest of yields, and then you got a relief. Well, guess what? We've had our relief, folks, and we have a meeting 3 weeks from tomorrow, okay? And in those 3 meetings, I think rates are going to be under pressure, and you're seeing the beginning of that today. Higher price, lower yield. The 10-year approaching 4.12 right now. We jump over the dollar. And, yeah, you got some dollar strength. So, not the usual relationship, right? When we're getting lower yields, you'd usually get a weaker dollar. That's not happening right now. We have dollar strength. And gold, okay, hits $4,014 an ounce. We're sitting above 4,000 right now. And even as you have a strong dollar, gold is not pausing at all. Now, you look at the volume on gold, folks. Look at this volume ramp up on a weekly basis. It's like out of the textbook of quality volume and time in the trade, folks, right? On this run we've had over almost the last 2 months now, from the middle of August, every single week we're getting higher volume on the upside right now on that gold contract. Check it out on silver. How about that run on silver? Okay, that's a weekly. Look at that. It's perfect. Culminating with last week. Now, Keep your eye on this, though, because that's going to be a hard one to follow. That is a hard act to follow, all that volume we just got that just pushed these markets higher, had nothing to do with the dollar whatsoever. Okay, you take a look at this dollar. The dollar's at 98.58. We were there in June. We were there in July. And we were there the week of August 11th. And we were there the week of August 18th. Okay, right where the dollar is. Gold is strong right now, man. Even if you get a pullback, okay, and there's where the run began. Dollar's right where we were at 3,400, and gold just traded up $600 to $700 almost, depending on where you start that rally. Remarkable strength and doing it with volume. Now, yeah, even the GDX, strong volume numbers. All right, we take a look at these markets. So Oracle gives things a little bit of a scare. That's a 30-minute. Let's put it on an hourly. Market's struggling to get away from here. It's going to be an interesting 45 minutes as we come in. It's almost like it's poised to break one way or the other as we come into the final hour, right? We've been coiled up for a period of 4 hours since that news broke that margins may be under pressure. And there's the headline that Oracle Syncs on the report. Its cloud margins are lower than expected. They generated $900 million in revenue during the 3-month period ended in August, and they managed about $125 million in gross profit. Now, you have an analyst in here who has a buy rating, so he's talking up his own buys, but stating that they wouldn't be doing it unless longer term they're looking for larger margins. Well, that's the most obvious statement out there, folks. There's going to be competition, but they've also got a $300 billion deal with OpenAI. And this is kind of a story of if you build it, they will come. But the valuations, when you get these types of accelerations, we're seeing them challenged today. And they're going to have to answer for that. And, you know, it's not just as easy as the circulatory nature of these companies are indicating, as you see in the risk today, that, hey, guess what? They're struggling to make the money that they're talking about here because it's pretty expensive to be running all those NVIDIA chips, even with $900 million in revenue. And the other side of that is if they're making $125 million right now and they're on that trajectory of growth, then it is a story of if you build it, they would come. And be real careful. You know, you can, listen, you see stories like this, right? We see the valuations, myself included, talking about the circulatory risks of it. There's nothing wrong with placing trades, but keep your stops in a market like this, folks. Keep them, okay? You got overnight risk no matter what you're trading, okay? But do not think you're smarter than this market. You think you can short it, you might be right on the valuation, all right? Maybe you were looking for a short of some of these valuations, but look at the recoil, right? Look at the shake-off. You get a story like that, and you got NVIDIA shares pushing green territory today. So these stocks are relentlessly strong. Just keep your stops in place. There's going to be plenty of trading opportunities in those markets. You know, you look at the market like gold, same deal. Oof, quite a run. $4,002. S&P's negative by 31. NASDAQ off by 145. We're coming back with our man Basil Chapman. Don't go away, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's off by 32 points. NASDAQ off by 146. And right now we're going to jump over to our man Basil Chapman, as we do each and every Tuesday at 3:15. And folks, you can check out Basil's Tiger Technicians Hour after my morning program every day, 10 a.m. Eastern Time. Tiger Technicians Hour Basil and his daily newsletter, The Opening Call, right on the front page at TFNN.com, folks. You can click on this button. You get access to Basil's outstanding daily webinar, folks. He puts updates out every weekend as well. You can sign up for $149 a month. It comes with a 30-day money-back guarantee, and you get access to some awesome webinars as well. Many of them, folks. Check that out. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing good. We have a little action in this market, Basil. Pretty remarkable action. I'm sure you saw some of those tech stocks, even on, and I'm starting it off, but boy, I'm giving you my own train of thought, Basil. Relentlessly strong market. We're in the red, but even on a day like this, NVIDIA shares basically flat when you get some of this action. What do you think about the action, Basil?
So let me just start off by saying in the Chapman methodology, we try to identify the lowest low bar and then count each successfully higher bar. If it gets each peak, we label peak A, then a higher one will be peak B, C, D, E, F, and G. The objective is to get a buy signal that's upgraded to a buy mode, and that should take you to at least a D, 4 higher peaks. It can go higher than that, but the objective is to get you to that D. All right, done with that. Now,
Nice.
Here's another thing. Within the context, is this Tuesday or Wednesday? Let me just show you something else. So what I'm going to do here is I'm going to just to sum up, kind of looking at what we are facing at this particular point. I thought I'd just go through some of the positions that we have and show you the kind of quandary, a very pleasant quandary we're in, but this is what I'm looking at. So the objective is to get to at least a D. Well, we have just made a peak E in the daily Dow, and that's at 47,049 on the 3rd, on Friday. And there's a technique that I use. It's called Chapman Wave Inside Track Repellent Zone. I try to join the tops of candles, whether it's the wick or the body, and I run it as a straight line, and then I make a little channel, and it's either an up channel or a down channel. And what happens so often is that, I don't know how it works, but it's because it's diagonal. If something was horizontal, you'd say, oh, we were once at 79, okay, we're back to 79. But if you're rising in a certain degree, how do you go from 79 to 83, then to 87? You know what I'm saying? And here
Yes.
it is. this is a diagonal line, and yet every time the Dow went into this range, it stalled. That number one is a warning. The technicals, the 9-period moving average is way over the 14. That's a positive. The MACD is still positive, just barely, but it's still positive. The stochastics just flipped to negative, under 80%, 75%. On balance volume, the little blue line here is just turned down from overbought to from an overbought level, and the relative strength is just weakening here, but still pretty strong. So with that in mind, I have to use a whole bunch of other things that kind of go together with the Chapman wave methodology. So here we are with the Dow at peak E. If I go to a General Electric, one of our positions that we still have a little bit left, made an all-time high of 307.25 around about the 23rd, and now it's arching over, but it hasn't failed. It's still holding very well. It's at 302. It's given us about a 52% gain in a little bit that we've taken off here. What we're looking at is the very next thing is the AIQ. Well, the AIQ is really, this is the Global X Artificial Intelligence ETF, all-time high yesterday, 51.39. We have some long positions, small long positions left because we've taken quite a bit off from 28, just under 29, and then from 36, and here it is at 51.39. Where is it? At peak D. The next thing I'm looking at here is Bank of America. Well, it made a high, an all-time high. Our target was the left side high of 3 years ago of 50 point, where was it? Right here, 50.11 from February of 2022. Well, it did that. It went just slightly above it to 52.99, peak D, and it's now pulling back, and the weekly chart is peak D. The next thing I'm looking at is CD. This is core mining. It's just been phenomenal. We've been long since, let me just move this to the side from right here, since $7.92 back in May of 2024, and here it is at 19.69. I mean, this is just, it's an amazing move to the upside. You were speaking about it, the gold and the silver. Is it telling us of gold and silver? We're also long the gold, and it's gone to an all-time high. Is this telling us something about the expectation of an economic something? That's usually when the gold soars to the upside where there's uncertainty. But it's just been through thick or thin. It doesn't matter. It's just been through the previous administration into this administration. So something else is going on. So it's been really a fantastic. Where it is, it's at this peak F right now. It says, all right, be a little careful. So you can go to Robinhood. Still a little bit left from the 16s that we got in at. Here it is, 153.06 yesterday with a round number, 153 open, and it's at 144 right now, up 58 cents. Where is it? At peak D. If we go on to IBIT, which is the Bitcoin, IBIT is the iShares for Bitcoin, we still have our long position, weekly charts and leg D, and this is spiraled up. It could be a peak F, but I'm watching it very closely because the Bitcoin itself, let me show you Bitcoin. Bitcoin had this very strong single move to the upside, and now it's kind of pulling back. But where's it pulling back from? Okay. A leg D in the monthly chart, a weekly chart in the Chapman Wave Inside Track repellent zone. One that we got into just recently, Iran. This is trading. We got into the 22.80. Where is it now? It's at a G/C at made an all-time high today, 63.40. I mean, these are huge moves. So when I put, let me just show you a couple of others here that we have. Symbotic, I spoke about this last week. This is the Symbotic is end-to-end AI robotic warehouse automation systems. Where is it? Leg E made an all-time high today of 71.29. So when I put the package together, it says, well, now you need to start to think of how you can harbor and capture as much of the gains as possible, because this is where you have to prepare for some kind of a pullback just based on the Chapman wave notation, because the technicals are still strong. It means that you can have pullbacks, and to get this 9-period moving average green to go pink underneath the 14-period moving average, in something like Symbiotic, you'd have to see it really slump to the to the 50s or even lower than the 50s. So I'm just looking at this, say, we've got to appreciate what we've got. I've got to be prepared for some kind of a pullback. And if I look at the very big picture, remember I said at least 4 higher peaks in a buy mode. Well, the Dow is in a buy mode. It's only in leg A. And it can't make, because it made a new high in October, it can't make a peak. You can't get a peak A until the last trading day of November. So all in all, I'm still very positive, just shorter term. Look at the SMHs. I mean, I always say semis lead us up, semis lead us down. 348.23 was the highest today, starting a bit of a pullback. Weekly chart, leg D. I'm kind of cautious, and I'm just trying to prepare. What can I do over the next few days to at least kind of capture as much of the gains as possible and prepare for some kind of a pullback?
My head's in a similar spot, Basil, and congrats on those trades. What I love is that you have so many different areas, from Robinhood to GE. You're really spanning it's just the charts, which I love, man. Thank you for walking it through, Basil. We appreciate it. We look forward to the program tomorrow. You have a great night.
Thank you very much, Tommy. You too.
Thank you. We'll talk to you. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now negative by 31 points, or about 0.5%. You get the NASDAQ 100 off about 146 points, or 0.6% in the red. And you have gold right now just over 4,000 at 4,004, up by 27 bucks. We hit an all-time high of 4,014. And right now, folks, we're going to talk to our man Tim Ord, as we do each and every Tuesday and Thursday at 3:30. And folks, you can reach Tim at his website, ord-oracle.com. There you see a picture of Mr. Ord. And over at TFNN, hit that services tab. He's got a couple of great webinars. The Secret Science of Market Tops. You can check that out. 90-minute webinar with our man Tim Ord for $149. And the 6 secret ratios every trader should know. Tim talks about some of those ratios when we talk to him during these segments. And I was thinking about some of those ratios as we got a VIX that's spiking a little bit today, Tim, and markets slightly in the red. Good afternoon.
Good afternoon. Good afternoon. Actually, let's start looking at it's kind of a dollar drop market. This is probably the worst trading time of the year, is this kind of September, October time frame. I mean, it can actually kind of chisel down or chisel up, but I'm being careful here. We were long, I don't know, last week we got out for a minor gain, but anyhow, this is the 10-day arms right here. We're at 0.88, and which is not ideal. You know, normally you like it up around 1.2, up in this vicinity, but I just wanted to mark the 5-day did get down there below 0.8, I think it was, but this is not, it's not enough panic in the market to really drive the market higher. I mean, it can, I'll probably get a signal later this week, if not early next week, but it'll be another minor bounce. It's not like a rocket ship to the upside. I do think that's coming. And I think that's coming later this month, but not now. So anyhow, I'm neutral. I don't think the decline's going to go far. Here's another, actually kind of a bearish indicator. The bottom window is the 21-day average of the equity put call ratio readings. This is actually the 10-day. You can't quite see it. This is a 5-day trend, or the 5-day equity put call ratio readings. You get readings below 0.55, which all three of them are. So that's a 21-day, which is a month. You got a 10-day, which is 2 weeks. You got a 5-day, which is 1 week. And so everybody's kind of just feeling good to the upside, I guess. This is the week before option expiration week. And that this week is usually whipsaws are common. Next week is expiration week, which normally has a bullish bias. I do think we're actually going to bounce during expiration week. Probably not this week. This week's probably kind of what you're seeing, maybe a little bit lower, but not much. I don't think anything big to the downside is coming here. But to really get the big rallies going, you really don't have the equity put call ratio readings this low. You really need them at a higher level, you know, preferably, you know, up in this vicinity here, which is, 0.7, 0.8 up in that range. And that's where you start cooking to the upside. And I think that's going to come. But right now, I don't think it's worth the short. I don't think it's too soon to buy yet. I think you got maybe a little panic later this week. Do I have a chart? Here's another bearish chart. This is the SPY VIX ratio. Even though we've gone up here, that ratio is kind of going down. I think this whole thing, my opinion, this is the S&Ps right here, the middle chart. I think we may go down a little bit, maybe more, not much. Then we go up, maybe break a new high or something like that. Then seasonality, there's I forgot it's another trading method. I can't remember the name of it right now, but it kind of looks at past history going into the current time, like in the current time frame. We've been up, I think it was 5 months in a row. And there's other statistics to support this, but the week after September expiration week, if the market was up 5 months in a row, the week after expiration week, normally a big slap in the face to the downside. And that's the one I'm kind of concentrating on. I think we probably could go down pretty deep. How deep's deep is hard to say, but I think these two lows down here could be touched. Somewhere down there, 550, 550 range, or somewhere in that vicinity, or 650 range. I think that's in that vicinity. So this is expiration week. I think is up, which is next week. I think the week after that is the big buying opportunity somewhere in this vicinity here, where we go back up and we break to new highs. To get that type of rally, you're going to need the trend, the 10-day trend. Somewhere in the preferably 1 point, I don't know, at least 2.0, if not higher. I'm thinking that's what we're coming into. Between now and then, it's a minor decline probably this week, a decent, maybe a 1%, 1.5% rally next week, then probably a 5% pullback. I've been getting kind of mixed up here. Things may change as going forward, but I think the trade to concentrate on is the one coming later this month, somewhere between 20 and November 1st. And that's the one I'm kind of concentrating on. I'm kind of like not stepping into anything that's really, unless it's really obvious. So anyhow, that's what I'm looking for. Nothing really this week, maybe a little bit more deep. The trend will probably pop up later this week to 1.2 or whatever. Probably not get the trend, 10-day trend up where it needs to be, but I'm going to trade it anyhow just because it's a 1% trade. I'm tired of kind of sitting on the sidelines. And maybe I'll get a good sell signal after the week of expiration week, maybe not. If I don't, I'm really concentrating on the late October bullish setup. That's my intentions right now. So how that works out, don't know. This September rally kind of surprised me, but because we're up 5 months in a row, that's really a bullish statistics. You have to go back. Actually goes back 40 years, and the probabilities of a big rally coming at towards the year end is really high, and that's the reason why I'm kind of concentrating on that trade. So we can flip to the gold market.
I appreciate you just going through it so detailed, man. And, I don't know if you heard Basil at all beforehand, but he was kind of talking about just how to protect, some of just been such a run that, I'd agree that, I think we're all kind of thinking, at some point it's got to breathe a bit. And it's not like, we're talking about, everyone's, of course, bringing up .com bubble, and it is a different story for sure in terms of some of these companies, the driving force of the revenue behind some of the AI bets. But boy, we're up right now. I mean, the NASDAQ 100 off the lows, let alone the year. We're up like 20% on the year, let alone from the April lows. So maybe a little breathing. With that, let's take a quick break, and then we'll jump over to gold. All right, gold hitting 4,000 for the first time. We're coming back with our man Tim Ward. Don't go away, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We're talking to our man Tim Ord. Don't forget, you can reach Tim at his website, folks, ord-oracle.com. And you can check out a couple webinars he's got under that services tab at TFNN. And we're jumping into gold. And the run continues, Tim. $4,000,
Yeah.
4,002. Yeah. What do you think about this gold market, man?
Oh, there's a change of character. I forgot who coined that, but it's a really important. What that says, what indicators in the past have worked and they quit working, that means there's a character change in market. So what has worked in the past, in other words, of all the what the market was doing before the change of character, correct? How to explain this? When the change of character changes, it changes the dramatic, or the changes the market dramatically. I'll put it that way. So whatever was working in the past, where the market was in a trading range, it'd peak out on an RSI of 70 on a high on a monthly chart, and it goes back down, it goes below 30. If that quits working, and for some reason the market continues higher, then that implies, in my opinion, the market was in a trade range from basically this chart here from 2011 to 2025. It finally broke out of that trading range because the character of the market has changed. And one of the reasons I actually went short, and this is one of the charts. Where's my all right? Is bullish percent index for the gold miners index. Previously, from 2011 up to 2025, every time it got up, or actually 2020, every time it got up around 95%, bullish percent index. In other words, bullish percent index measures the point and figure buy signals in the stocks in the gold miners index. So 95% of the stocks in gold miners index were in buy signals. When that happened, the market was at a previous times intermittent term highs. And I pointed those out, right here and right here and right here. And this is one of the reasons why I actually shorted here, because the bullish percent index got at 100%. Well, that happened right here, right around the 50 range on GDX. And here's another signal that I took. This is the GDX monthly RSI. And I pointed out the previous signals, every time it got up to around 70, it was a high. So I usually have at least two indicators that give the same signal. This gave a sell signal because it got above 95%. And I use a totally different indicator to come up with another signal, not using anything similar to the bullish percent index, and that's this indicator, which is the monthly RSI, which hit 50 previous times you get it. And the same thing happened, came around 50 range, right in that range. Well, both markets just kept on going. So that's a change of character in the market. That's my point. I actually even have a couple other indicators. One is the RSI on the GDX GLD ratio got up to around 70 also. And all of them failed. And that's really unusual, but you got to go with, if you get failed tickets, that means that the indicators didn't work. They just previously worked. Now they don't. You have to find some new rules of indicators. So you got to really look at the bigger picture, what's going on. And this is what it kind of prompted me. The previous one I had in the last show was last Thursday. I was doing the GDX QQQ or GDX NDX, I don't remember. This one goes back further. That's the reason why I wanted to point out this is the XAU.
Yeah.
So it happens. So I got another cycle in here. Ideally, they said you should have 20 cycles. Well, market sometimes doesn't give it what you want, but this is the same 12-year cycle. And so it's on the XAU. It comes out similar. We didn't have this information on this one here. It peaked in, looks like 1988 approximately. And the RSI is kind of what you want to look for, because the RSI was bearish all through that 12-year period, bullish in this period, bearish in this period, and now we're back to bullish on this period. In previous times, you had 12-year cycles. So I'm thinking something big's going to the upside here. And you got the actual government. Over the last 12 years, the government's kind of been bearish about going in and digging up land, digging out the minerals, because that's bad for the environment, my opinion. And I think the markets have opened up again. So now you can actually go drill for oil, you can drill for minerals and all this other stuff. So the environmental people are kind of pushed aside, and now opens up these, I think, this is my view anyhow, of all we can dig minerals out of the ground now, we can, go for excavating for oil and all this other stuff. And I think these type of commodities going forward are probably going to do pretty good as a lot better than they did in the last 12 years. So I'm thinking the doors are open here, and these markets are in the early stages of a great bull market. I think the last 12 years, how we doing really short term here? This is a short term chart. This is where we are right now. This is the bottom window is the daily, or actually the 15, this is a 15-day average of the up-down volume. The next higher window is a 15-day average of the advanced decline. And anything above, or actually anything around 30 is really good. Anything above 20 is good. They get bearish when they fall below minus 10. And that's way down here. So even though we've been rallying here, these indicators so far are pretty much holding up fairly well. When they get below get around 0 and below, you got to start watching out. But we're not, so far we're not. So the internals I'm saying here still look really good.
Nice.
Can we keep on rallying? I don't know. The market's super extended, but this is a momentum indicator on up, down volume and advanced decline. So momentum is up. And if you look at another indicator here, which is I'm up there. Let's look at kind of a bigger window. This is the 15-day average of the up, down volume, advanced decline indicators. So this is a 50-day advanced decline and up, down volume indicator. And up, down volume for some reason works a lot better than advanced decline. Don't know why, so I trigger off of that. But last time we got these indicators close to 30. Now this is a 50-day. It's a 50-day average. So your tech, there's that's almost 3 months, 2.5 months of data. So it's a kind of a big indicator. It takes quite a bit of big time. Anything around 30 is really good. And we moved up the last time we talked about it, I think it was 31. We're over 32 right now. And so previous times, we got the signal right there on this one, and it still went up another 5 months after that. This one went up another year. The signal came a couple of weeks ago, maybe a week ago. We're actually still rising, because last week we were 31 and change, now we're 32. This is still going up. So we actually haven't even hit the peak yet. So does that mean we have at least another 5 months to go? I would say. So, people are not... They're looking at the gold market here and kind of just wondering. I'm thinking, well, this is too high to buy. And according to these indicators, no, it's not. So
yeah, and we people have been saying it's too expensive, right? It's from 34, 3,500, 36. So in the same mentality, man, quite a run, 4,000, and that's with the dollar doing pretty well since August at least. As gold's plowed higher from 3,400. Tim, thanks so much for the education, the conversation, man. We look forward to talking to you on Thursday.
All right, sounds good. Thank you.
Okay, take care. We're coming right back, folks.
Focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in the red. Oh, we're right where we were, right on that initial sell, just after 11 a.m. Eastern time on that Oracle story about some of the margins in AI, and you have the NASDAQ. You're talking about a range of only 25 to 50 points almost since you were there. Right now, off by about 0.5%. S&Ps off by 0.4%, trading at 67.63, negative by 25 points. Dow off by 0.2%. The Russell off by 1.1% right now. Bitcoin trading off the highs. Bitcoin participating, right? There's your 11 o'clock news on AI. Bitcoin trading with the NASDAQ 100, accelerating beyond there, but down by 3% right now for Bitcoin. You jump over to crude, catching a little bit of a bid today. Crude prices up 40 pennies at 62.09. Jump back to yields. We got a little bit of higher price, lower yield with the 10-year right now at about 4.13. We jump to the dollar as we wrap it up, and you got dollar strength with gold strength, right? Hoo-wee. And as I was talking about, finishing up there with our man Tim Ward, you take a look where this dollar's been, okay? We're at one of the highest areas we've been except for coming into almost June, right? This area in June, as in you were breaking the 99 area was the floor from April. We're right at almost 99. And meanwhile, over that period of time, you had your consolidation from April to August, and you've broken higher from 3,300 and change to 4,000 on gold. We jump over to Oracle, and quite a clawback of the losses. How about it? Right? Oracle getting back $13 of that loss. You drive down at 11 a.m. to 271. We're at 284. You're down by 2.4% right now. Oracle's not even down as much as Bitcoin is. NVIDIA, almost in the green. They were dramatically higher coming into that news. NVIDIA off by 0.2%. AMD up, continuing the run of yesterday, up by 4%. Intel up by 1.7%. Netflix with a bid, up by 2.5%. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We'll see you back here tomorrow morning, 9 o'clock for the morning market kickoff. Thanks so much, folks. Have a great evening. We'll see you tomorrow.
Building wealth